at the moment, the only real clarification I can give you is that oil is going to go long. So I can't say anything for a fact, but oil. Oh Jesus, where is oil? The low risk, high probability outcome play. The only one I can see right now in the short term is oil going long. It's got to hit $10 and then bounce. Cool, let's quickly zoom our way down here. Again, I had a little sneak peek earlier, and there's still not many trades I'd like to place. I think one of the risks you have by just look at the charts all the time is that you end up trying to force trades, and I guess over the last week everything's been on tenterhooks. I guess it's been the same message I've said for the last week and a bit now, that the market hasn't really picked a clear direction yet. So again, if we look at Aussie Loonie, the big picture is that it's been falling for a long time. It was exacerbated by the equity crash or the Corona crash, but we are in this big old pullback. And the thing is, if you're trading properly, not like this silly crazy crash account that I'm playing with, but if you're trading properly, it's I guess it's a lot harder to place trades if you're, I guess, with the knowledge, or I guess the assumption that the market will start heading down, or is highly likely to start heading down again, and that everything's just being propped up by stimulus. Now, obviously, if you have like a mechanical system like the TJ, etc., then yes, by all means, crack on and do that. But the fact that we've got the bot going, even the bot with its machine learning, etc., it still hasn't placed that many trades. It's placed probably 2 or 3 trades last week. So the fact that the bot isn't really placing many is actually a good thing. I'm actually pleased that it's not placing that many trades, because it's showing that we have expectancy filters. So potential setups are basically coming back as not that good in terms of expectancy. Aussie Loonie, Aussie Swissy, not much. I mean, if you were to do the 8 EMA bounce and trail, there have been a fair few opportunities actually. I haven't personally been doing that. I'm not doing much manual trading at the moment, other than dicking around with this crash account. But yeah, so if you were to do the 8 EMA bounce and trail, you may have had some good opportunities. I mean, that would have been quite a few opportunities on all of them actually. But yeah, I think everything's just too samey. All the Aussies look the same, all the Euros look the same. I don't like it. It's quite unnatural. Aussie dollar again, yeah, everything just looks too stock-like. Bitcoin, same picture really. Hasn't really done much. It's still trugging up this trend line. Well, some sort of trend line, depending which one you look at. Something like this. I don't know. It's a bit hazy, really. All I know is that when you look at the sort of the bigger picture, this massive sort of wedge in a falling market is bearish. But again, Bitcoin doesn't necessarily stick to the rules. So again, if we look at Bitcoin on the Coinbase chart, slightly clearer. But again, yeah, I think the halvening is coming up soon. So I think in May, March, April, May, May or June. Let's have a look. So Bitcoin halvening, I think it was mid-May last time I looked. 21 days time. Basically, the block rewards are going to drop from 12.5 to 6.25 Bitcoin per block. So every 10 minutes. So 12th of May. Now that doesn't necessarily mean. I mean, if you look at the halvenings in the past, you don't see crazy returns straight away. What tends to happen is that I guess 6 to 12 months after a halvening, that's when Bitcoin typically increases. I don't have a chart of all the halvenings at the moment, but I'll try and dig one up later. So that's that. We can just move this aside. Okay, Loonie, Swissy, same thing, not interested. Loonie Yen, same thing, not interested. It is, yeah. And then we have the mess, which is just this. I mean, it looks like there's a bit of a symmetrical compression here going on the 4-hour chart. But again, looking at this on the daily, it's just, you would not want to play with that. I mean, that really is sort of like a 500 pip sort of mess. So no joy. The Chinese stock market, yeah, God knows what that big old spike was. But it looks like it gapped up. No, it didn't even gap up. Oh, yeah. It looks like it gapped down, went all the way up here, and then just closed below it. So interesting. Yeah, sorry. Copper should continue to fall eventually, but again, look, identical. I just don't like this. In fact, on all of these sort of patterns, we're seeing, I mean, this looks very similar to the S&P 500. We're seeing this rising wedge, or this pincer sort of movement. And at some point, these patterns do pop to the downside. Ether, same thing. Euro Aussie. Yeah, I mean, this has been good for the 8DMA bounce and trail. I know a few people have been shorting the euro using the 8DMA bounce, so nice one, guys. I mean, it has been an absolute beauty, other than this pop through here, but the euros have been good for the 8DMA bounce and trail. Yeah, Mitch, I just saw your comment. Yeah, it is a non-event. The halvening is a non-event. That, I mean, if you look at history, it has been a non-event. Every time it's halved, nothing happens. It's big old hype, really. All it really affects in the short term are the miners, because the miners all of a sudden go from earning 12.5 Bitcoin per 10 minutes, or per block, to, well, yeah, it's going to halve. So, yeah. Euro Swissy daily chart, yeah, it's just been falling again. This looks bearish on the 4-hour chart. We're having this sort of compression here. Again, not all high test and low test work, but you can see that it's rallied up to the top of this compression. It shot back down, and this looks like it's quite bearish. I mean, as you know, with these compressions, you have a high probability of retesting the baseline, or the beginning of the structure. So this should at some point hit 105.10. I mean, such a slowly moving pair, this. I mean, this looks big, but really it's like only 10 pips away, sorry, 20 odd pips away from this 00 level. So yeah, euro pound, same thing. It's just been relentless. But again, it's just too manipulated. I've been saying this for weeks now. I've never seen the markets look so manipulated. Everything looks like the same thing. It's like we have this massive list of currencies to trade from, yet really there's probably 4 things that we can trade at the moment. So no joy on that. Euro Kiwi. No. Euro Swedish krona. No. This, however, looks quite bullish. Again, it's the inverse pattern that we're seeing on all the other pairs at the moment. Falling compression in a rising market means we should attack, you know, the top of the structure, whether it's this triple O level or this one. But we should see a pop to the upside. But at the moment, nothing's really broken out other than oil. Like, oil is pretty much the only thing that has disconnected from this whole sort of thing. We'll get to oil eventually. Euro, yeah, euro dollar is still being squeezed. I mean, typically when markets crash, people flee to the dollars. It's a perceived safe haven. So typically euro dollar falls quite precipitously during crashes. But with all of this up and down here, you can see that the ECB is also trying to, I don't know, I just don't think us plebs, as it were, us mere mortals, we just don't have access to all the data that's going on behind the scenes. I mean, I've done a lot of reading, I've done a lot of, YouTubing. Not that you can call that research, really. But, like, I have a good understanding of macroeconomics, but even I don't know really what's going on at the moment. So I know it may be slightly frustrating. I can see Mike's just got off and buggered off. It's frustrating. I've been studying macroeconomics for well over 10 years now. And the fact that I'm pretty clueless, or not clueless, I feel there's something missing. I feel there's something out there which I'm missing and I don't know about it. There's a couple of missing jigsaw puzzles which I can't fit. And I have a feeling, I have a high confidence, not that it means it will happen, but I have a high confidence that we're going to see much, much further falling. So when we're looking at the big sort of macroeconomic stuff, then it's pretty clear cut. Like, people are being made jobless left, right and centre, 2 billion odd people on lockdown. The global economic engine is just ground to a halt. Everyone's scared of this second wave. When you look at the fundamentals, it's incredibly bearish. However, the unknown out there is that we are now in a completely new world. The central banks, the governments, they are all doing things that they have never done before. Like, even now, the Bank of England has bypassed its open market operations, and it's literally, so normally when a country tries to raise capital, the government sells bonds to the central bank buys it with fake money that they plucked out their arse, and so when they're creating that currency, that whenever you create currency, you create debt at the same time. So what happened recently, the Bank of England just ignored that whole shell game and went, screw it, we're just going to bypass that and just create currency without the debt aspect. So that's never happened before. So we're going to see, it's quite likely we'll see a lot of other countries and central banks trying to do it that way. You have to understand that the reason that credit or currency creation is created like that is literally one of the biggest farces and hoaxes in history. It's basically the the central bank cartel 100 odd years ago managed to con the world, mainly starting with the Federal Reserve. In fact, before I go any further, required reading, because I'm just going to sound like an absolute idiot. Creature of Jekyll Island. Okay, so where's the long one? I'm trying to find it here. The Creature from Jekyll Island. Okay, so this is one of the most informative books I've ever read and then listened to. So if you click this guy, look for the 1 hour 47 minute one. This is the author. And
the banker says we have $100 deposited, but don't worry, folks, we can loan you more than that.
Yeah, you can't listen to it in times 2 because it's a bit fast.
Well, how can you loan up to $900 when you only have $100 deposited?
So he talks all about fractional reserve banking. I mean, it's a really old book. This is one of the first things that got me into the whole trail of everything. But listen to this, and you'll fully understand where central banks originated from, or the modern world central banks. And it's basically, I mean, the Federal Reserve is a private company with private shareholders, and they pay their shareholders 6% dividends a year. And that's a fact. That's not Illuminati bollocks. That's reality.
You can download it as an MP3 and then you can play it at 2 times speed.
Can you?
Up in the URL after YouTube, after the E, put PP.
What here?
Yeah, PP.
Yeah.
And hit enter. Let it think now. Or click start maybe there. There you go.
You can download it.
Then click on MP3 in the middle. Up.
Sorry. Oh yeah, there. And then you can download it. Nice. He speaks too fast to listen to it in times 2, by the way. But nice. So that's a cool trick. So PP at the end of the YouTube bit, and you can download.
Yeah.
I like that.
The banker says we have 100.
Lars, you are useful.
At least someone says that.
Nice. I like that. That's cool. But yeah, so yeah, basically what is talking about is that, so the Federal Reserve is I mean, a lot of other central banks, they're not fully private like the Fed, but all the other central banks, they sort of adopted, they managed to, in most other countries where there is a central bank, they got the same process going. So every time a government wants to, create currency, they do it via debt. And so every government is in debt to their central bank. And then you have to look at, okay, who the hell controls all the central banks? It's the biz. Banking for international settlements. So yeah, it's absolutely crazy. That is the only way, the reason why we have this ridiculous thing. So because it makes more sense. Like, yes, it's not good for a government to be able to just print currency like that, but it's a hell of a lot better than doing it like that than doing it via going through a loan shark, which is effectively what a central bank is. Either way, I mean, there's always going to be, currency dilutions, no matter what system we have in place. So, John Capes, yeah, absolutely agree with Creature from Jekyll Island. Yeah, it's good. So, euro dollars. Let's move on. Sorry. In fact, we'll do the indices as a one. Okay, so euro pound. Pound Aussie is interesting. So on the daily chart, it's been chugging up this trend line here, and I remember, if you go back a week or two ago, basically the markets are all up here, and I was like, yeah, because I was going long on pound Aussie, but I was like, there's too much of a gap between sort of the market up here and this trend line, and guess what's happened? The market is pulled back to this trend line. Now I don't know which one you're looking at, whether it would be this one or this one. I mean, there's sort of, it's like a band really. If I extend that, oh come on cursor, move, there we go. I guess there's a sort of a band of resistance, but as you can see, it has crashed through that. Now, will it bounce? No idea. I mean, I guess if you were to hold a gun at my head, I'd say there's a 60% chance of it bouncing north from here. I mean, it's resting on this double O, but it's not a tradable play. And looking at this on the 4-hour chart, it's a massive head and shoulders. So, yeah, no joy. But it's interesting nonetheless. Another compression on pound loonie. As we've been saying, there's been just compressions on every pair. And remember, with a compression, you have to understand it's a spring. It's like the market, whatever market you're looking at, is being squeezed, and there's all sorts of potential energy just being built up. And at the moment, we're seeing these compressions in every market. We're going to see an expansion, like when you release a coiled spring. So yeah, I always get interested when we get coiling and towards the apex of compression. So we're seeing, like, probably this or next week, we can see something explosive for sure. Pound, no. Looking very stocky, like, yeah, pound yen again, looks like the stocks, not interested. No, mess. Pound dollar, very interesting, but I think euro dollar and pound dollar, it's just too dodgy for the moment to be trading. It's hard unless you're trading on the lower time frames. I mean, you can't let me rephrase this. Trying to trade on the sort of the daily charts at the moment is a bit iffy. There's just too much going on. But if you were to trade maybe the 1 hour and the 4 hour charts, like using the 4 hour as, I guess, a directional bias, and then executing on a 1 hour, you can catch some of these moves, like this little rally here. If you were to do, say, the 8 EMA bounce and trail, you potentially could. But again, I'm just going through the bigger picture stuff. It's just looking shit. Natural gas, yeah, bouncing around. That should continue falling. Yeah, Kiwi just looks a bit shit at the moment. That looks like indices. Not interested. Not interested. And then the dollar crosses. So the dollar, we've had dollar strength during, short term dollar strength is what happens. Market crashes, everyone flocks to the dollar because it's safe, even though it's it's got its own problems. We've got another compression here. This is very similar, or it's the inverse to the euro dollar. Don't know which way it's going to go though. Chinese. Remember, the Chinese yuan loves to devalue itself. So this, I mean, if you look at the renminbi, it's been rallying for. Dollar Chinese yuan. It's been rallying for ages because China is an exporting nation, so it's in their interest to have a weak currency. So exports are cheaper for the buyers. And I think we should, I can't see a change in this actually. As in the direction, I can't see this correcting much, especially now that the Chinese are trialing and playing around with their digi currencies. They're going to be able to create a lot more currency a lot quicker without that debt sort of concept that I was mentioning. So they could just print they could really just press a few, 1 and X amount of zeros a lot easier than normal. So I think they will try and protect its exports. That's its only cash flow, really. Dollar, yen, on the 4-hour chart, it looks like a little bit of a squeeze to the downside maybe occurring, as you can see here. So this looks slightly bearish here, but on the daily chart, it's just a joke. Mexican peso. Oh, everything is squeezing. Everything is squeezing. Look at this. Sorry. I've got my silly microphone in front of me. I can't actually see the keyboard, so I have to keep on looking where the freaking keyboard is. Right. Yeah. So a lot of squeezing happening, and if I was a betting man, I would say that we will see the exit of these squeezes pretty darn soon, and it's all dependent on whatever the indices do. I reckon when indices break out of its little slump, either up or down, we'll see everything else breaking out, and then we'll have something to trade, because whatever direction it goes, that will be the direction it's going to fall for a few weeks. So yeah, so we just got to wait. But again, I wouldn't jump in too soon when we see the breakout, because you have to be aware of fake outs. Now let's have a look at the stocks. So the French CAC still doing its thing. Again, we've got that squeeze, getting really squeezed. It's getting literally towards the end of its apex there. It's a lot clearer on the 4-hour chart. I would say this week is game time. Looking at this, I mean, it's not often you see it just dribble out of a big compression like this, and this is a big compression. So that's that. Looking at the JER 30, I'm just going to get rid of these entry cells for the moment. Right, so on the daily chart, we've got this sort of compression. You can see this a bit more on the 4-hour chart. So it's a bit more time, maybe. Yeah. The NAS is just ridiculous. It's just like it's the one that's retraced the most, which is interesting. And it's still, yeah, I think today is a bit of a pullback day. S&P 500, same thing. If you were to plot the the retracements, sorry, yeah, almost had a 60-odd% retrace, almost. That's on the S&P 500, but the NAS just has shot through that. The NASDAQ is almost. It had about a 75% retrace, or as in pullback. FTSE, same thing. We're just waiting. Today is it seems like today is having a bit of a down day. But there's more area, there's more room. So actually, look at most of these indices. It looks like there's a bit more upside before it chucks out. Again, it's a bit. Yeah, in fact, look at the 4-hour chart here. So on the US 30, you can see that there's a lot more upside, and on the 4-hour chart, you can see it's attacking the bottom of this compression at the moment, like it did before. Last week, it looked like we could have had a sort of a triple top, and it was just attacking the bottom of this this line here, and then it then shot up into that open space, and so I wouldn't be surprised if we saw that move into this open space. Because personally, I was looking for 25,000 exit for my longs. I'm in a bit of no man's land at the moment, but yeah, be disappointing if it breaks out of this at the moment. So we'll see what happens. It looks like it's reacting, but we'll see. We'll see by tomorrow at least. So they're the indices. Now let's look at oil. Oh man, oil is just Jesus. So it closed. Oh, sorry, not that. Yeah, it's just gone. Literally in the last. I forgot where it closed, but so it gapped. So it went from 18 where it ended on Friday, and it just gapped down. It's just, yeah, it's gone. It is, as you can see, one of my entry orders actually kicked in, but then it got squeezed out too quickly. So I only got a tiny move here in the middle of the night, but only 83 points. But yeah, we are getting close to my $10 call. And you would have no idea how much flack I've got over that $10 call, because I put a YouTube video out like somewhere ages ago saying, oh, we're going to see $10 oil, and this was when it was around. It was actually when it were higher than $35. Anyone that's been in the RT for a while has probably heard me say $10 oil like a parrot. But yeah, it's interesting. I'm looking to go long at $10 though, if I've got any spare margin in this account. Yeah, I think $10 is going to be a big psychological level, and we'll hit that. And yeah, I think I'd like to go long at $10. Now, going short now would be foolish. I mean, look at the daily chart, big overextended candle. I mean, I'm looking. It's highly likely we'll see some sort of big pullback, a minimum to the $15 level. So if you want to get in on this short, I would wait personally. I would actually probably put a tentative one around the $15 level, as in to go short. And then if we see something like this, yeah, so we could see actually a pullback to sort of $17 really. Yeah, I would not short it now, by the way. If anything, I'd start scaling in some longs.
Yes, Kevin here. So would you not tend to go long on that?
Yeah, exactly. Yeah, I'd scale in some longs. So what you could potentially do is, let's say you have an amount of money that you want to play with oil. I don't know how big your account is, but let's just say you wanted to risk, I don't know, let's just say you wanted to risk 2% on oil. What you could do is, yeah, you could just scale in the long. Let's say you can have 4 shots in the chamber, so 4 trades of 0.5%. So what you could do is you could, like at market, go in now, because it could just bounce off here. Remember, because $10 is such a big psychological level, everyone's looking at this $10 level. $10 level. And the markets may actually preempt it. They may actually look at it and go, everyone's expecting $10. They've probably got all their shorts or whatever, so the entry longs here. So this is why sometimes with massive with it tends to reverse before you hit it. So yeah, you could go in. So let's say you have. So with oil, I know this is going to sound reckless, but I would not place a stop. So this actually defeats the whole object of that 2% thing. So because what we know for sure is that oil is not going to zero. Okay, this is like, yeah, oil will not go for zero. Okay, it has to be sold for something. I mean, you have all of OPEC, which are huge freaking nations. Like they're highly reliant on oil prices at the moment. It won't go to zero. I'm telling you that now. But there's nothing saying that it may not spike down to $5 or, geez, I mean, FXM won't even let me zoom up any further. Here we go. Like, it's, yeah, I cannot, oh, no, I've just lost my scale. Here we go. So, I just can't see that happening. So what I would probably do is, let's say you actually wanted to risk 2% of your whole account. I would say don't have I'd use like a fictional stop. So you could say in your mind, okay, I'm going to have my positioning size with a fictitious stop of, let's say, over under $5. And then you could scale, you could put in your longs. So you can have one there, one at 10. And then, yeah, you probably have it like so. This is, by the way, I'm not saying use these entries. I just want to give you the theory behind it. So you basically have 4 entry orders with a fictional sort of stop round here just for your position sizing. So this one, you'd be, dividing, 0.5% divided by 700 odd pips. This one by 500 odd pips. This one by 350, etc. But obviously it depends how daring you want this trade to be. But I cannot see this going much lower around here. You're going to see, they've already done massive, so OPEC got together and they all collaborated. They're all working as a one last week when they all decided to cut production. And the reason they're trying to cut production is to basically reduce the amount of supply, and so price goes up. So if demand remains constant and you cut supply, price should go up. So that's what they all did, and they all cut supply, and guess what happened? It did nothing. Oil just went, looks like you're in trouble, and then the market just crashed. So I would not be surprised if in the next week or two we saw even more drastic measures. Everyone's going to be looking at Saudi to really just stop the flow now. But Saudi are gonna they won't want to cut more than everyone else, because if Saudi cuts more than everyone else, it means everyone else is getting sort of a bigger share of the market. So yeah, it's weird.
So it's Kevin again. Yeah, no, I've gone in at market with no stop loss. I've only got 70 quid on it, so it's not a big account. And I actually tried to put a limit order in as well, but it won't let me put a limit order in much above 15 quid. I want to put one in up just under 20, and it wouldn't let me put a limit order. It said too big, or there's a character incorrect.
Have you
a strange message
toggled the pips thing? So when you say what, so yeah. What to go in?
No, I tried to put it in as a level rather than a pips.
Interesting.
So actually, no, beg your pardon. What have I got the limit? No, I've got the limit into $17 odd. But if I try and drag it up above that,
so if I just put like a entry order in, I just
value entered is too far away from the market price or contains an invalid character.
Yeah.
So he's not having it. That's just fine.
Yeah,
if the price goes up, I'll just move the limit up.
Yeah, or just study it, or just monitor it a bit more, and if it goes up to there, you just exit. Yeah, but it's interesting. I think this is.
I reckon it's going to pull back. So
yeah,
just a punt.
This is a very high, low risk, high probability trade, guys. It really is. So obviously, I would scale in, but we're going to see a bounce to oil. I'm pretty darn sure of that. So yeah, interesting. It depends how risque you want to be. I've always poorly executed oil. I remember I once did a whole bunch of leap options on oil, and I got the direction right. I just didn't execute it properly. So where was it? This was back in. No, it's way back. Let's have a look. I can't remember. It's 2015, 2016. So yeah, we rode this one down here. That was it. So one of my big plays. Again, if you're around me or in the community around 2016, I was screaming from the rooftops that we would have a massive rally in oil, and I was calling $50 to $60 oil around 30. So it basically, oil shat its pants all the way down here, and then I was like, my lord, like we're going to see one hell of a pullback to around 50 to 60. Again, all the macroeconomic rubbish. And and I tried to do it via leap options, and I just got, yeah. So it was annoying. I got the call right. It literally smashed straight back up to 50, and then later on 60. But unfortunately, I actually lost money in that trade, even though I got the call right. So it's frustrating. So, and with this, I'm as confident in this call now that we're going to see a rally, like to the minimum of $15. Actually, what would be quite healthy is that we'll probably see a rally back up to 20, because remember, this is going to be a massive level, and this is a classic breakout. So what tends to happen with classic breakouts is that we have a retest, kiss off the previous support, now resistance, and then we'll see much more sustained falling. So with this spike here, it's unlikely to go down to $5, $2, $5. However, if we were to have a pullback, and for this the market to fanny around for a bit and consolidate it for a bit, and then continue its slow death, then it's more likely to go back down here. But what we're going to see now is knee-jerk reactions. Going long is a very good idea here. Annoyingly, in this account, have I got it? Oopsie. Screens. Yeah, I've got no margin to actually place this trade, annoyingly. So, does the bot trade oil? Unfortunately not, mate. Just majors, minors, and equities. Remember, just another heads up, only have one equity selected for the bot, not several. So yeah, that's oil. Market has opened, as in the US market. So oil is interesting. So I really want to go long. I'm now trying to weigh up, do I close some trades so I get more margin just so I can go long now? Anyway, so even if we do have a pop to the $15 level, if you're to get in around now, that's it's only 300 points, but still high prop target. Cool. So let's have a look at what stocks are doing. Okay, so the market's opened. Seems like we had some pre-market falling, and now the market's going, let's I don't know it's not really doing much. As mentioned, even on the S&P 500, where can we just, so we drew that squeeze on, it's not as clear actually on the S&P 500. Depends which one you're drawing from. I mean, there's definitely that one there. Yeah, I guess there's something going along that one as well, but not as clear. So we'll see. It's early. Interesting to see if it bounces off this support level, though. We'll see. I'm just curious. So I'm sharing my screen here. Do you only see the chart, or do you see my face as well?
Only the chart.
Only the chart. Okay, interesting.
I see your face, bottom right-hand corner.
Yeah, me too.
Okay. Well, yeah, I just wasn't sure. I've got my comedy background on again. I've been looking for it. I haven't seen any interruptions yet.
I've seen it. The dinosaur popped in.
Did it?
And it was sat down, read a book, and then out the door again.
I found so on Zoom there's an Elon Musk thing as well, so you can put your basically Elon face whilst talking. So I'll have to check that out soon. Tesla. Okay, so whilst we're talking about him, Tesla. I did a bit of digging because I was like, there isn't anything that happens in Tesla or SpaceX that I don't know about because I'm uber geek. And I saw this rally and I was like, what? That's ridiculous. The whole market is falling. Yes, okay, we're in the middle of a big old retrace at the moment. But there is nothing happening in Tesla at all. Like, nout, zero. There's no silly announcements. There's no for a rally like this, you would have expected, oh, hey, we've just released a new battery technology of some sort or whatever, and we've had no movement up. Like this was I just don't understand it. It's retraced a lot harder than it should have, even though all the markets have rallied. Like let's have a look at BMW. Okay, so it's not a fair comparison. So BMW is terminal death or decline at the moment, for as we can see here. But this is a normal sort of market pullback, right? I mean, the equities have retraced 50 odd percent. I guess, yeah, BMW, Mercedes. Yeah, Daimler invented the car. They're the first proper car company. Yeah, so what we're seeing here is the same sort of picture as we're seeing on all the stocks. And then Tesla comes and does this, which is, okay, it's looking very NASDAQ-like, but this is too bullish, this is too aggressive for, yeah. And then I had long story short, I found out that Goldman Sachs has a new Tesla analyst on board. So you have to understand that Goldman has been one of the biggest bears for Tesla for a long, long, long time. And they've now got a new Tesla analyst, and all of a sudden he's bullish. So what happened last week was that this new guy came on board, I forgot his name, and he went, Tesla is very bullish. We now have an $800 price target. I think it was, wait, let's just double fact check this. Goldman Sachs Tesla target. 5 days ago, is it this one? That was it. $864 target. And there was a leak. So what happened? Well, there was a potential leak. So yeah, Goldman says, so what happened is that the rally, the aggressive rally started happening a few days before Goldman came out with its $864 target. And then it came out and then it continued. So, I don't know. It sounds very conspiratorial to say, you know, oh, they leaked this to their prime customers before they officially announced it. But in the banking sector, they do this sort of shit all of the time. I mean, hell, there's I can't say names, and what I'm about to say is slightly out of date. It's probably 2 years out of date now, but I know for a fact that there was a WhatsApp group with some big traders from competing banks. So there's literally a WhatsApp group of bank traders from Goldman, HSBC, Barclays, Deutsche, etc. And just like, you know, I guess all of us have random WhatsApp chats, you know, with friends, etc. And they were like, they used to chat and go, right, what are we shorting today, lads? And now, so stuff like that happens. Now that's not so that isn't an official thing. So that WhatsApp chat, I'm pretty sure their bosses probably weren't aware of it. You know, as in the head trading, the head of the trading floor of each of those banks, they probably were unaware of it. But just like in the realistic trade, I know that some of you guys have other, you know, splinter cell sort of other other WhatsApp groups, and yeah, so it happens all of the time. So I would not be surprised if something was let slip. So interesting. Mind you, Tesla has a battery day coming up. Now it sounds really boring, Tesla battery day, but they've had to postpone it till next month. So battery day is when basically when Tesla goes, hey, this is what we've made, this is what we're making. The rest of the industry can go screw yourself. Like they do normally release some pretty interesting updates. So maybe it could be a pre-rally in run-up to Battery Day, and people are expecting big things from Battery Day, seeing as that they've bought two massive battery companies, Highbar and Maxwell. So yeah, they can basically cut out a lot of the costs in battery production now and make it slightly more efficient. Anyway, enough about Tesla. So that's that. Let's get out of here. What else do we need to look at? Had a few questions about ontology, Bitcoin, etc. Like, I'm not in any crypto right now. I'm fully out. So yeah, nothing will happen until Bitcoin decides what it's going to do. And at the moment, Bitcoin doesn't really know what it's going to do. And I literally have no idea which direction. But they seem to be correlated with stocks. So I guess if stocks start moving down, then Bitcoin, etc., could carry on moving down. But yeah, I still see further falling. Personally, I do want to get back into Bitcoin. I really do, but not just yet. For me, I'm just waiting to see the markets capitulate. We haven't seen any capitulation right now. So if we go back to, let's say, I don't know, the S&P, we're not in the capitulation phases. Like I'm in some Facebook groups. Like I find one hilarious one. Something, is it financial independence? Now I know. Yeah, this one. So I know Facebook groups in general are like echo chambers, but this is like one bigger echo chamber. And I was just scrolling through this the other day, and it seems like no one in this group has any idea of how bad the macroeconomics are right now, how bad the fundamentals really are. Because most of these are, all the questions here are like, what stock shall I buy on Hargreaves, or what stock do I buy now? We're in a bit, like they're all posting pictures of this and go, oh look, the market's retraced 50 odd %. It's back to the clear, all-time highs again. I don't know. I see a lot of people getting burnt with this suckers rally, which is the relief rally, or the stim pump, is technically called the suckers rally. So Sam J, yes, in that group, they're a big fan of classic fire index, fire and forget. Yep, they are indeed. I have not posted anything in that group, and I won't. I'm just going to be a silent observer. But yeah, they're very traditional. Put more money into your pension, that sort of stuff. So I guess it's garlic for me, really. Yeah, I'd get ejected. So, however, yes, this is the suckers rally, but we're in new times. We're in a completely new world. There's so much happening right now which has never happened before, with stocks, with governments, everything. And there's still that little birdie on my shoulder going, yeah, but what's going to happen? The market, all the central banks are now looking at creating their own digital currency. They're going to try and bypass the open market operations, selling the bonds to the central banks, yada yada yada. That's going to give governments much freer flexibility, or the central bank more. Or basically, with this new setup, the central bank will effectively be more of the government's bitch, if that makes sense. So the government will effectively be able to go, right, I want to print $10 trillion, go. And they can print $10 trillion without getting $10 trillion in debt. So they'll basically, it's an easier money printer. And they'll be able to, which means that there's the annoying birdie on the shoulder is saying, Siam, we could have a bit of a stim pump a lot higher. Now you have to imagine this, like every government, every central bank, they will no doubt have access to the world's best and brightest minds, okay? And they have all of the data, so they're cleverer than us, they have more money than us, they have more incentives to do whatever they need to do than us. And they're also aware, they're socially aware these days. I think in the past they haven't been, but now with social media growing, I think they're more aware, and they're probably fully aware that every man and his dog right now, is saying, oh look, this is the standard pullback, we should see further falling all the way down. I mean, I know that YouTube and anything Google related is like an echo chamber for what you like. Actually, I've been watching a lot of David Dobrik vlogs at the moment. But I'm sure if I just scroll down here a bit. Okay, we've got someone. Yeah, actually, I haven't been watching that many financial type stuff, but in incognito mode, I was looking around, and there were lots of basic videos going, hey, look, this is the standard pullback, this is gonna be what's going to happen. And although this is exactly what I'm saying, and I do agree that something like this is going to happen, that's the big term. There's a big unanswered question of what's actually going to happen in this area. That is what I don't know. Big long-term picture, yeah, I'm going to bet my house on, or I'm going to bet the farm that we're going to see further falling, way down here. I'm not sure how low, but we're going to get, at least clear these lows. Let's say $1,500 level. So, but I don't know when and from where. When and from where is what I do not know. So in this case, could it continue going up here? Somewhere, it could do anything around this this yellowy area, and then do its its fall. It's this is the bit I'm slightly anxious about. So yeah, I think the textbook move is something like this now, as in 50% pullback, let's have you. But I think now the whole world is moving towards digital currencies, as in the central banks are going to replace their currencies with digital currencies. I'm slightly. I think, remember, a good rule of thumb is that the market will always do the thing that screws you over the most, especially Bitcoin. And so I think the move that could probably screw over a lot of people is if the market actually continued a bit more, maybe up to here. So all the people that are blissfully unaware, like in that Facebook group, they will just go and they'll say, oh, look, the market's going back to all-time highs. It'll get people spending more. It'll get people, oh yeah, there's no market crash. There's no, big old depression. Look at the stock market. Because that's how the masses think. And that'll just lull a few more people in. This is also going to take out a lot of people that are shorting this, and they've probably got stops, around here above the 50% retrace level, or hell, above the 3,000 level here. So they're aware that a lot of people are expecting this to, a lot of traders especially, are probably going to do this. So this is why I'm long at the moment. I think the markets are probably going to try and rinse a whole bunch of people by just extending this a little bit more. And then we may end up having a bit of a chop. So we may have, chop central for a while, where the market will do big old moves down and then big old moves up, and then and then it'll probably create some sort of, I don't know, double top like that. And just as everyone's been rinsed through the washing machine, up and down, then it may do something like that. I don't know. This is all conjecture, but yeah. But if we draw, so I think 1,500 is the big number I drew last time, wasn't it? I think it was something like this. Oh no, that's the first one. So if we go back even further, I think we need the weekly chart. I think it's something like that. Yeah. So I think a lot of things are going to happen very fast, but on a bigger picture. So, for example, I'm fully expecting all the world central banks to create their own digital currency and replace the pound sterling with digital pound sterling, the dollar with digi-dollar, euro with digi-euro, etc. They'll get rid of cash full stop because it transmits viruses and other sort of pathogens, blah, 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 which we know is bollocks. They want it so they have full optics on our finances. I think all of that's going to happen a lot faster than people think, but it may still take 5 to 6 years or so before they completely get rid of physical cash. But on the grand scheme of things, getting rid of physical cash, if it takes 10 years to get rid of physical cash, that will be a blink, literally, on the bigger scale. So, yeah. And I think we'll have these digital currencies all backed by the IMF SDR. And the SDR will be backed by a basket of different things, gold, and all sorts of bits and pieces. So, yeah, looking at the comments. So any questions? That's all I have to say today. Annoyingly, we missed the surge. The surge which I'm always looking out for, which is oil. Missed out on it. But now that the markets are open, what's happening? What's happening on the... Yeah, not much at the moment. FK says, hey Simon, Malaysia have started in Jan 2020 going digital. Have they? I did not know that. That will be on my research list. Cool. Yep, FXCM oil expires today, 5 p.m. New York time. So what is that? 9, 10 o'clock for us? What are they? 5 hours? I think, something like that. Yeah. Any other questions? Feel free to unmute yourself. I'm here for a while. Anyone?
Siam, with that,
Yo.
the last statement from the oil, would you recommend getting out before that happens? In 4 or 5 hours, whenever it is?
It really is 50-50. I know it's good practice. So with a lot of these things, so I get similar questions a lot when it comes to, I know, non-farm payroll or interest rate release or unemployment figures or all these sorts of news announcements, and the same with FXM oil expiry. And the result I have found in just my own experience is pretty 50-50. Sometimes the news will affect you adversely and sometimes positively. So I'm less worried about these things. So in the past, I've had trades, as in oil trades, and I've let it run into the expiry. Obviously, it then closes you out for profit or loss, whatever. But then you just get back in. I don't know. I'm indifferent to them. Kevin, what do you think, mate?
Sorry, just trouble with the mic. Well, I do have an open long on it, and I think I'll let it run into the expiry today. But normally, I wouldn't trade this close to the expiry. But I just think this is a great opportunity, so I'm going to just let it run into the expiry tonight.
Oh, so you think long and oil at the moment is pretty cool, as well?
No, I wouldn't say cool. It's a punt.
Yeah, it is.
But I'm now. Where are we? I've got 2 trades going. I'm 128 pips up on them.
Nice.
Grand sum of £15, so I'm not hardly risking the farm on it, as Siam said. But yeah, I'm just having a little punt on it. So it'll do what it does. If it went up and hit my stop loss, sorry, my limit order, I'd be even happier. But yeah, I'm just going to let it run on this one, and highly likely, see where it is, but highly likely to go long again after the on the reopen tonight.
Yeah.
Oh, and completely different, if I may.
Yeah,
jump
go.
on since we've got the mic. The Starlink train will be passing over tonight again at 2 minutes to 10. If you want to go out and see
Oh,
it.
cool, sweet.
So I missed it last night.
Yeah, I did as well.
Yeah, I've seen the videos of it. It looks ominous.
Yeah.
So so if it's clear skies tonight, and it should be, just before the market opens,
Nice.
should have a sign in the sky.
Nice. That's cool.
Cheers.
Cool. Lars, Giles, you guys are normally doing stuff. What are you up to at the moment? Any trades that we have not seen or looked at?
Nope.
No.
No, I'm not. I'm just trading US 13 oil at the moment. Not really busy on other stuff.
Yeah.
As you say, there just doesn't seem to be any nice patterns. So.
Yeah. And like for the new, we've got a lot of new trialer people here at the moment, as in newbies, going through the beginning videos of the course, etc. And if I just find this picture, if I can find, basically it's the RT car. It's my trading tortoises. And come on, where is it? Cartoons. Where is it? Cartoon. Here we go. So, long story short, we have the realistic trader trading tortoises. It's a silly play off the traders, turtle traders, but You have all of these tortoises, and these are really good disciplines to exhibit and execute on the market. So you need to, in fact, I'll quickly run through them all actually. So there's this one, this patience tortoise. Basically, you got to be patient. You must, like, one thing a newbie trader always tries to do is they think that they always need to be in a trade. And so they go hunting for trades, and you really shouldn't. So that's that. Then you got organized. You need to be organized. You need to basically have a routine. You need to be. I'm failing with the organized tortoise at the moment personally, but yeah, you need to log. You need to analyze your trades, etc. And that comes hand in hand with being disciplined as well. And if you have a set system, you need to stick to it. Now, this is why I love the bot, because the bot is the most disciplined trader version of your trading you'll ever have, because the bot will not go against its trading parameters. Snob tortoise is good because you basically need to be picky with your trades. Like if you've got a proper account, like proper trading account with live money, you're not taking any punts or gambles or anything. You really need to be picky. So again, you mustn't always be in a trade. You need to just look for the low risk, high probability outcome trades. Mind you, oil is a low risk, high probability outcome trade. Boring tortoise. He knows that trading is really, really boring, like always. But boring trading is good trading. And the nonchalant tortoise, you just must not care about what's happening. And that, yeah, so you need to trade with a position size so small that if it goes against you or with you, you're like, meh, whatever. So if you're going to bed, like I call it the pillow test. So if you go to bed and you're even thinking about one of your trades, you've egged on your trade way too much. You've basically bet way more pounds per pip than you should. And then don't be Siam the dabbler, Danny the dabbler. Yeah, so these are all things you shouldn't do at the moment. Yeah. So yeah, they're the trading tortoises, and then get a dog and call her Pips. So that's that, and yeah, right now there's not much happening. So yeah, just having a look at some of the questions here. Eddie, it's nice to know that you don't think there's much to trade. Yep. Yeah, there's just not much. So that's that. Yeah. Also, in fact, whilst we're just waiting, because I don't think the market's really going to do much at the moment. Let's have a look at euro dollar. Nothing. Pound dollar. Both markets are open. London and New York are open for trading, but not much is happening. Just having a quick whiz. Oh, not ether. Sorry. No. None of these are moving. Pound Aussie. Gonna keep my eye on that one. But yeah, nothing's actually happening. Kiwi dollar on the daily looks squeezy. So it's a bit meh. Not much happening really. Okay, so looking at the Q&A, not received any Telegram alerts since the 14th of April. Should I have got any? Are you referring to your bot, Perminda? As in your trading bot? Because if so, then yeah, that's normal. So even if you've got your trades to a setting, as in your bot to a setting of like here. So if we were to look at like my main aggressive bot, if I just did a quick back test on that, you'll see that I've set mine up for I don't know, 6,000 trades or something like that. Now that's all it's saying, by the way, is that 5,000. So all this is saying is that if you were to run this bot from January 2011 till now, it would have placed 5,108 trades if you were to play with those settings. That's all it's saying. It's not saying that over the next 9 years you're going to get another 5,000 trades. You could have 2,000 trades. So everything it's showing you here is not necessarily showing you what it will happen in the future, if that makes sense. So this is why I really don't like looking at this yearly performance, because the data is all skewed by 2011. So personally, this is why I like sticking to the monthly play, because it's basically showing you, like, let's just look at the last, I don't know, year. If you were to run this bot over the last year, hey, my dinosaur's back.
How long will it take you to notice that?
Yeah, so I've got it on another screen. So I Pips is actually on the sofa. If I move, maybe you can see Pips. Oh no, she's gone. She was on the sofa. But anyway, I'll be making more later. What was I talking about? Yeah, monthly. What was I saying? Yeah, I look at the monthly thing just because some of the the yearly performance is just skewed. So yeah, and at the moment, so if the last trade I personally got, let's have a look at my Telegram. Where's my Telegram gone? I'll get it on another screen. So people's thingies aren't. There we go. Yeah, so the last one I got was the 17th of April, and then the 14th. So I don't know what your settings are, Pamenda, but if you've got the same settings as me, then you should have got one on Friday the 17th. And my settings are this. Ignore the risk, but I've basically got expectancy of 10 with a 1 take profit, 100, 200 ATR. So... and I don't have the 15 or 30 minute charts set. So, oh yeah, on in the Facebook group, just one other thing. I'm not sure if many people saw this, but it's important. I've seen a few questions about position sizes with the bot. So where is it? It's here somewhere. Oh, I can't be asked. I'll just show you. So basically, the question was something like, "Hey, I've placed it. I've got a trade. It's placed something at Basically, the person not person. There's been a few people. It's basically confusing the difference between your pounds per pip and the amount. Okay, so this, yeah. So basically, if we get Telegram back up, and I'll show you, go back to this. So let's take this trade here. So this, I would ignore how many lots it's doing, okay? Just look at the percentage risk. So it placed that trade at 0.77% max risk of your whole account. So lo and behold, get my lovely paint out. So if you had I don't know, let's call it a 10 grand account, and 0.77 is, let's work this out, times by 0.0077, 70, oh God's sake, yeah, of course it is, £77. So that is your risk. So what it would have done is it would have risked no more than £77 on that particular trade. But then you have to look at the stop loss. So I mean, I guess we could change the stop loss, the wording here to make it easier. But if you click on this, it will show you the parameters. Obviously, I placed the trade, and it's still mid-trade. Nothing's really happened. But look at this. So it says it's going in at 23.23 lots. That does not mean 23p a pip. So you have to work out how many pip stop loss that was. 36.2 pip stop. So all it's going to do is do 36.2. So 77 divided by 36.2. 36.2. I'm having fat fingers here. So with your 10 grand account, you would have placed a trade of £2 and 12p a pip, or 13p a pip. So yeah, that is what would have happened, not 23p a pip. So yeah, And also, there may be discrepancies between the stats in your RT bot, like these stats, compared to what's in your like live account, and that's mainly because when you set up the bot will be these stats are based on that 10 grand demo bot that's built in, and if you add or withdraw funds every now and again or from your live account, or if your live account started later than your live bot did, then there's going to be a slight mismatch. So hopefully that makes sense. What else is there? That's about it for that. Oil is looking like it's just going to consolidate for a little bit here. Any questions at all? Anything handy or helpful to share? I don't know. Are you guys this quiet if you go to the pub in real life?
The drink starts talking, I think.
Yeah, I was going to say there's usually drinks. You can get some virtual drinks.
Yeah.
Could you just share your settings again that you're using for the bot?
Yeah.
If you don't mind.
If you want to get it quickly, if you go to setup videos, and then video 6, they're there. This is what I recommend.
Okay, that's fine. I've got those in. Just making sure I've got those in. Okay.
And also, if you have multiple bots running, like here, I've got 2 bots. Don't forget, sometimes they may duplicate the same trade. Obviously, it depends what settings you have, but you may have, so it's probably worth reducing your risk. Like this one, I've got, relatively low risk on this one, but this is my aggressive one. So, that's it. There's nothing else to really share about on the markets. What else is there? I had a question about inflation. I can't remember which media, it was either Twitter or LinkedIn, because we have all these countries printing shitloads of currency or debt, etc., and they're like, where's the inflation? And basically, when you have mass stimulus like this, you don't see inflation straight away. It gets absorbed by the financial sector, i.e. the banks, and so inflation effects are normally seen down the road, 6 to 12 months down the road. So there's a lot of very hypey YouTube videos out there at the moment going, hyperinflation in America is coming, they've just printed $2 trillion, blah blah blah. I wouldn't be surprised if we saw hyperinflation in the US, but not anytime soon. Let's have a look at the chat box. Alex, we don't go to the pub. Ain't allowed. Yeah. Mind you, I don't go to the pub even if we are allowed. I'm a bad drinker. I fall asleep when I get drunk. So, yeah.
That sounds like a good drinker.
Okay, I'm not a fun drinker. It's like, hey, let's go out. Let's go. Yeah. Just fall asleep.
Is this cuddle still going ahead digitally?
Yeah, it'll be a digi cuddle. So what I'll do is I'll prepare some presentations. I will drive, because this will be important work. I'll drive to the office. I'll be the only one in the building. Don't worry. And then I can set up everything properly, because it's just too much of a risk holding it at my house, because I have shitty internet and I can't exactly tell the kids and my wife to stay away from the living room all day. So what I'll do is I'll just set it up in the office and then we'll get something going. It'll be a lot shorter than the normal cuddle. I can't, because obviously with the cuddle there's all sorts of other bits and pieces we do, but if I can I'll just set it up like this in the office, and then we can go through a few bits. Do we need booking for the cuddle? No. Yeah. You'll be charged if you don't show. No, you won't. So yeah, that's that. I can go through a few other bits and bobs because basically there's a pattern which we always fall through. All governments or all countries go through when we see depressions, and this is what I mean. We're highly likely to go into a depression, and you basically see some sort of shock. You then see the panic relief. You then see the further falling, which then induces big inflation or hyperinflation, depending where it is. And then, well, no, you basically you have a bit of a whiff of deflation, where debt's being wiped off, which means the currency supply is shrinking. And when you have basically a whiff of deflation, the central banks go batshit nuts and they go print, and then you see the knock-on effects down the line of big inflation. But yeah, and unfortunately, whoever's close to the source of the currency printing gets first dibs on any assets at current prices. I think, what was the effect called? It's called the Hanlon effect. Hanlon effect. I can't remember. It's been a long time. Hanlon's razor. Nope. I have to find out. But it's something. It's called something. The Hanlon the effect. Something effect. Where basically whoever's close to source basically can buy anything they want at current prices. So this is why the US has loved it, because they've effectively printed free currency for ages, and they can just go out and buy whatever they want for free, effectively, because they just plucked it out of their ass, like oil or other stuff. But yeah, and then eventually, price is like a massive sponge. So the way it's worked best in my head, because I have to put it into simple visions, is that price is like a big old sponge, and this sponge will literally absorb all of the excess cash or currency supply out there. And so if there's more currency supply, the price sponge is going to basically absorb it and get bigger. And so yeah, prices eventually go up, but not straight away. Which is, yeah. Anywho, yeah, the markets are dead. Not much is happening. We had that bounce off this support line just like before. It's too early to say that it's definitely going back up, because it could have another bite at the cherry, but I think that's all I have to say today, really.
How confident are you that it will hit the entry short you placed at the 26,000 level?
Entry short at the 20... Oh, up here. I don't know. There's a limit there as well, actually. For these longs originally, I was like, yeah, I'm expecting a bit of a follow through. Yeah, so actually I need to reassess these. So originally when I placed this long, I thought, okay, the real premise of this is that I'm betting that the US government and central banks are weeing themselves, and I'm really, yeah. So this is really a bet that the US financial system will kick the can down the road slightly longer to protect its year-end bonuses and its stock price, etc. And don't forget, Trump needs to be re-elected. What was it, November? Is it November elections?
November 3rd.
November 3rd. Whew, it's a long time, actually. So, in fact, let's draw a line in November. Where is it? Big vertical line. So, November 20. So that's an interesting question. Can Trump manipulate the market long enough till November? I don't know. I think that's...
Hard to say. I mean, a similar boat to you. I've got a short which I'm nursing with a hedge, and I put an entry long pretty much where you put one. And yeah, I'm in a very similar position to you on this particular index.
Yeah, it's I don't know. But yeah, when looking at the limit, I thought, okay, it may. I mean, everyone's looking at the 25,000 level. A lot of people, because it is a big support level, and I was thinking that maybe if they did a stim pump, it would be pretty fast, and I was hoping it would just shoot over. I think that was a bit of a stretch, 26. I think maybe I would actually like to get out at 25, because the higher this goes up, the lower the I guess the risk reward ratio gets a bit funny, as in like the higher the probability of falling, the higher. So the higher this goes, the higher the probability of a roll, a reversal. So, mind you, I don't think the Trump re-election thing is. I mean, that's a long time to hold the market this far. I mean, if you were to put things in simplistic terms, you could probably say that this amount of falling was, let's call it, 3 weeks of lockdown. So you have to understand that the markets these days, a lot of the price that we're seeing right now is more of a future bet. So the price we're seeing right now here is basically people betting in the future. So for example, a lot of this falling was due to a lot of people thinking, the virus is going to screw over a lot of people. Jobs, in economies, blah blah blah, and so the market falls. So we had the big old falling of the market, even though the world wasn't at lockdown. Does that make sense? Somewhat. So this falling here is, I guess, the market. I can't draw this bloody circle. Is the market falling in anticipation of the world grinding to a halt? If that makes sense. And so I guess you can say, and then we had obviously this relief rally, and so now that the world is probably going to go into another 3-4 another month or two lockdown, could there be another one? So I just think it's going to be really hard to hold that low until November. I mean, I'd say that we're going to have.
By the sounds of it, the US isn't going to go into lockdown for that long.
Yeah.
With everything Trump said.
Looks like Trump wants to keep it open.
Is it right that both long and short, it basically has a month expiry on it? So once the month's gone, it doesn't matter where you are, it liquidates.
Not.
Or am I wrong about that?
1 second. I don't think on the indices. 1 second.
Or it just keeps going and going and going and going and going.
Yeah. So contract X.
You do pay fees, don't you? That's
it's rollover. I think it's just commodities that do that. It's not the indices. It's just the rollover. That's all. So it will stay there. It's just the commodities that have a expiration date.
So it's indefinite.
Yeah. You can let them run for a long time. So.
Okay, I'm stressed out now.
Yeah, you pay a roll though.
Dividends, right?
Sorry?
You pay negative dividends.
Yeah. So if
there is a disadvantage to holding them open.
Yeah, this is why spread betting is not good for long term. It's only for short term stuff. So I'm trying to look at if you look at the simple dealing rates, if you go to say the US 30, actually it's saying it's nothing. So that's inaccurate because I have got a negative roll. So like with this one, it's saying that for every lot that you buy, let's say, of the French CAC, it'll give you 0.17 of a lot per day. I think it's 17 pence per lot if you hold it long. It's been a while since I've looked up at the roll because it has changed a fair bit, but yeah.
It's on US 30. I'm seeing about £3 a day per lot.
Per lot, yeah.
So just yeah.
So
it's got to be worth it to hold the size open.
Yeah. I hate to say it, I'm stumped. I really am. I know that you're here hoping for some sort of clarification or direction. At the moment, the only real clarification I can give you is that oil is going to go long. So I can't say anything for a fact, but oil. Oh Jesus, where is oil? the low risk, high probability outcome play, the only one I can see right now in the short term is oil going long. I mean, it's got to hit $10 and then bounce. So yeah, so I would phase in your buy orders, and yeah, and I'd be cautious about putting stops in. So, but yeah, that's a lovely, God, that's a gorgeous bar to fade. Absolutely gorgeous. Big old bars like that, love a big old snapback. And unless one thing I will be researching for you guys is, like, from where I sit and from my knowledge set, I'm pretty darn freaking sure oil can't go to $0. Because that means oil is then free energy, and it won't. And like, there's so many costs involved. Already, OPEC are producing oil below costs. So again, this has been a good couple of years since I last done this Google search or this research. So OPEC oil production costs. Sorry, I need to move my bloody microphone. 1 second. Can you still hear me if my mic is further away? I'll just speak a bit louder.
Yes.
Cool. Price of oil. No. Quick Google. So how old is this? 2015? No, go away. So again, you have to check the date of all. Whenever you're doing stuff like this, you need to have a look at, when it was produced, because it does change a lot, especially in oil. How much does it cost to produce? Oh jeez, I've lost. No, in fact, I think it's going to take a lot. I was hoping it would be a quick Google, but I'll open that just in case. Cost of oil, that looks up to date. Let's have a look. Just a quick look see. Wiki, no. Cost of production, when was this? 2016? No, irrelevant. I won't spend too much time with this. I can do this in my own time. Just wait for this to... Looks like there's some pictures that won't paint. I think it's probably because I've got to sign in. Yeah, it looks like I've got to sign up for this. Okay, what is this? Cost of oil production 2019. Okay, I'm going to have to look at this. I'm not sure about these figures. I'm pretty... Nah. But yeah, I'm pretty damn sure oil is not going to $0. I mean, it could spike down to like a couple of dollars, but it won't be there for long. Yeah, the barrel is itself is worth more than the contents. So Alex says, do you think the big boys will push down cryptos after, at, or just before Bitcoin halving? I personally think that, like you, all of us, we're pretty close to the market, right? We're looking at the prices, we're looking at the news around it, we're looking at everything. But we are such a tiny, tiny subsection of the economy that are looking at cryptos. The biggest money on the planet are, funds, billionaires, family offices, all that sort of stuff. most of them still probably don't even know what a crypto is. Most of the money out there, like in the banks or whatever, they're like, oh, that stupid Bitcoin gamble punt. You know, most money is nonchalant. So all the big money out there, they're not in Bitcoin yet. Just look at the market cap of Bitcoin. It shows that no one's in Bitcoin. Like when you look at it, there's what, $250 trillion out there sloshing around in various formats. Barely any of it is in crypto. So going back to your question, Alex, I don't think the big money gives a shit about, first of all, crypto, Bitcoin, or it's halvening. They'll just think, oh, it's some whatever techie mining bollocks. So what I actually see happening is that once the market has indicated to us that, you know, the market's going to do something, up, down, I don't know, I think when the big money goes, shit, actually, we want some of that Bitcoin, because when we move into an inflationary world where everyone is just printing their digital dollars, digital euros, etc., and everyone is doing whatever they can to avoid deflation, your best bet is to get out of cash and then into non-inflationary assets. So things that can't be inflated away, like gold. You can't print more gold. You can't print more land. You can't print more. Yeah. So fine art, fine wine, gold, land, stuff like that. Yeah. So and Bitcoin, you can't print more Bitcoin. In fact, its distribution is plateauing big time. So I think Bitcoin will do very, very well when we get into a big inflation period. So a lot of people are thinking all-time highs like in the next few months and stuff. I don't see that happening. It's only when we see the price sponge expanding to the point where everyday people are being hit, and real inflation is hitting the real market. That is when Bitcoin will shoot to the moon. And it's when the big money, this is just my opinion obviously, when the big money goes, I want some of that Bitcoin, how do I buy $10 billion of it? Because don't think you'll have these Arab sheikhs that, you know, have no idea what Bitcoin is, and then they'll probably go, oh shit, I've missed the boat here. How do I buy $10 billion worth? And you can't just go out in the market and buy $10 billion worth. And you have banks trying to get all their grubby hands on it as well. So you're going to have billionaires all rushing into this tiny asset, which is completely illiquid. And so what they'll have to do is they'll have to do big old tree shakes again. How do you do a big old tree shake? You do exactly what they did in 2017, 2018, etc. You probably, like the banks will probably facilitate it. Like these Arab sheikhs, you know, not just Arab sheikhs. Let's just say a slightly uninformed billionaire. And by the way, not all billionaires are market wizards, by the way. You'll find that a lot of billionaires, they're very adept at stuff, but there's a lot of them who are very good at business. You know, they just built $1 billion business, they sold it or whatever. But they're not traders. They may not know a lot about macroeconomics, and so they may just go to their private banker, buy me $1 billion of Bitcoin, please, go. And then all of a sudden, that order is now, you know, their Goldman Sachs private banker now has to go and buy $1 billion of Bitcoin for the rich billionaire or whatever. And you have all these billionaires, and you're trying to get some allotment. And so guess what? A lot of the orders will go into the banks. And so what is Goldman going to do? If it, like the shake, let's say prices, I know, what is it now? $7,000? Yeah, it's pretty much 7,000. So the shake will go, hey, I want $1 billion of Bitcoin, please, Goldman Sachs. Can you go and get it? Goldman will go, yeah, sure, we can get $1 billion, easy. You know, and they'll say, well, we'll buy it. We can get it to you around because you're buying in bulk. We can get it for you $6,800. The rich man or woman goes, okay, get me $10 billion at $6,800 then. So guess what? Goldman Sachs now has to buy $1 billion worth of Bitcoin at $6,800. What are they going to do? They're not going to go and buy it. They're now incentivized to basically buy it far below $6,800. So what do? And what does every other bank do? They'll probably start a rally because there probably isn't $1 billion or $10 billion of Bitcoin out there to buy. That's even though the spot price is showing $7,000, you won't be able to buy that. So they'll probably start a massive rally. Where if there needs to be $1 billion worth of sell orders in, so you're gonna have to rally it a bit. You're gonna have to pump it up to jazz hands out, get all the public buying, and then when there's loads of buying, they'll probably dump it, and then it's during the dump where people go, oh shit. Like if Bitcoin suddenly shot down to $4,000, $3,000, you can have a lot of people selling. So yeah, that is where they'll buy. So then Goldman makes $1 billion profit. If they can buy Bitcoin at half the price of 6,800, 300-400, then all of a sudden they've made double the money. I don't know. So that's my little rant. Sorry, that was a long answer to your question of are they worried about the halving? No. Short answer. Other questions? So one of the questions was the value entered is too far away from the market, but I think you're probably trying to place something on oil, and for some reason it won't let you place a limit higher, too far away for some reason. I'm not sure why. Alex, but you don't need most of them to move crypto. Yeah, you don't. You don't need at all. Goldman's going to do like JPM and open a crypto trading desk. Yep. If it isn't already open. No, got it. Yeah, I think that's it. I think it's time to call it a day. Unless there are any other questions.
No.
Yeah. Mike said, "What was the reason for switching off minutes, mate? From the as in the 15-minute and 30-minute settings?" Yeah. Yeah. So a couple of reasons actually. So when you let's just look at this. Let's do a little back test. So all I'm going to do is just play with the time frames, and let's just put the 15-minute in, and same expectancy, blah blah blah, and test. And what you'll find with the 15-minute and 30-minute chart, the bot actually found no profitable trades. I don't think. Let's just give it a moment. And it's the same for the 30-minute chart. So that's one thing. It's just not that profitable. And also the 15-minute trades. So if you look at my journal and look at the 15-minute time frame, it lost. It was net losing. So I've got what was it? 3 winners there, all losers. Yeah. So all the 15-minute trades were dummies, and all the 30-minute ones were pretty much losers as well. And then really it starts getting profitable or better. So no, the 1 hour didn't look that good either, but from 2 hours onwards I think it started getting really good. But also I personally got autopilot on. I know you guys don't have access to this yet, but you will soon, don't worry. What we found, or what I found, is that on the 15-minute chart it'll find a setup, it'll go, it'll place a trade, but then the market may have stalled a bit, and then the EMAs will probably still be in the right order, and then another setup will happen. So before you know it, you've got like 2 or 3 setups at roughly the same price level. So yeah, I just wanted more, and obviously the higher the time frame, things are more reliable. But it's not to say that the 15-minute and the 30-minute is a bad time frame. I just think for the trendy jibe, which it by definition is a trending strategy, it's not that good. But we're getting a ranging strategy coded up as we speak. So the ranging one I think will be better on the 15-minute and 30. It's going to be basically a mean reversion Bollinger Band one. So yeah. So that's that. Lars has found a cool link. Let's have a look at that. Is it me? Why am I? Have I got ad blocker on this site? Let's try that. I can't see anything. Okay, here's my ad blocker. That's why. Nice one. Oh, it was the same site, wasn't it? Yeah. Okay, so fiscal break even. So by the way, this is 2018. It's not that far away. So let's look at Saudi. Yeah, so Saudi needed $83 a barrel to break even from their fiscal policies. External 55. Yeah. Long story short, everyone's in pain. Just from this little glimpse, like you can see that $10 barrel oil, or what is it now? $11 barrel oil. Oh, $10.99. We've technically done it. $10. So $11 a barrel right now is crippling everyone. But they can't. So this is why you have to understand. Like they can't. So let's say it costs, I don't know, Saudi at best 50. I haven't really looked at these stats in detail yet, so I could be mistaken here. But let's say it's costing them $55 a barrel, break even. And right now it's 11. They're losing a lot of money per barrel of oil. So you would have thought, well, why don't you just stop producing? If you're making a loss per barrel of oil, why don't you just stop? Now, that's what a normal person probably would do. Like if you had a business and you're selling a widget, hey, my dinosaur's back. Pips is there somewhere, I'm sure, on the couch. There she is. Anyway, so yeah, like if you're a business and you're selling a widget that costs you 55 quid to make, you wouldn't sell it £11. You'll just stop selling or stop the business or whatever. Or you play a longer game and still sell it because you're using it as a loss leader to, for upsells, let's say. But for a country like Saudi, they can't just stop producing because that is their cash flow. That's their main cash flow. So they're still going to pay for stuff. So yeah, they're all OPEC are pretty much going to continue pumping out oil because they need the cash flow. Unless they stop. Yeah, and also with OPEC, a country doesn't just want to stop because then all of a sudden all the other countries will still keep on getting cash flow and a bigger market share of the of oil sales. So yeah, it's interesting. But long story short, they're in trouble. And this itself could actually be the little tiny pinprick to pop the energy junk bond debt bubble. Because that shale oil, shale is long dead. Shale is like so dead. Yeah. So yeah, good. It's going to be interesting. I'm bullish on oil right now. Very bullish. Cool. Yeah, I think. Any other questions? God, I want to go longer than that. I'm so bullish on oil right now that I want to kill all of my equity trades at a loss, take a big hit, and then pump that same exposure into long oil. So that is a reckless thought that I'm thinking of on this crash account. So yeah, I think I need a coffee. I do need a coffee. Well, thanks, boys and girls. Hope that helps.
Thanks,
Thank you. See you, everyone.
Cheers, Siam.
And yeah, I'll put out the recording once it's rendered. Cheerio.
Thanks, mate.
Bye-bye.
Thanks, man.